Mind CRM. It is more than just a CRM. It is a real estate and business mastermind that comes with an all-in-one CRM. You can have unlimited websites and users. You can call, text, RVM, and email all in one user interface. And you can set up custom automations for any type and multiple businesses. 65% of companies start using a CRM system within the first 5 years of business. Once implemented, the Hive Mind will save you on marketing, give you more time, and make more money. One of our users had his first $100,000 month using our system in June. We want to see you automate and accelerate your business. Text us at 210-972-1842 for future meetings, and of course to get our $1 course on how to make more than 6 figures on one land deal. You can schedule your free demo today at hivemindcrm.io.
And we are now live. So, well, we're not live, but we're recording for live. So, howdy, everybody. I'm Frank Spalding with the Hive With Us podcast. Daniel and Anthony are not here today. Who is here today that I'm very happy to have met is Jared Lutz. He's the CEO, as you can see, from of DCAP. So, I will let Jared say hello to you, and we'll go forward from there.
Hey, I'm exactly what Frank said I was. I'm the CEO of DCAP. We just released our, I'm going to plug our software real quick. Please. Here. We just released our MVP, which is the minimal viable product for real estate tokenization. So it's a very exciting time for us.
Outstanding. And the URL will be put up. We'll add that to the bottom of this recording time so that everybody can see decapdigitalassets.com. So you've been in syndication for a while, I'm assuming?
No, I'm a tech guy. So like my business partner has been in real estate for over 10 years, and he's more on the operations side. And then, our team is very focused on their core competencies. So with the executive team, there's only one person that has that extensive real estate experience, but that's their job. That's their core competency on the team. I focus more on the operation side of the business, as well as the tech is like where my core competency is. And then we've got marketing, graphics, coding. Everybody's got their role on the team.
I can relate. Teamwork makes the dream work, as the saying goes.
Yeah, no, absolutely.
Years ago, I had a sysadmin firm set up similar. Everybody had their core focuses, and it worked well that way.
Yeah, no, I've always found that like if everybody focuses on their core competencies, that's what makes a really good team, that dream team. But what's been interesting for me with this particular software building out has been that the learning of the legal side. So I had to really understand all the complexities with regulation and compliance and due diligence, because that all has to be coded into the software to ensure that, bad actors aren't in there, that if it's a 506B deal, that only certain people are able to see that deal and that it's protected from the public, stuff like that, all has to go into it. So it's been a really cool learning exercise for me. Yeah, I had to do something similar with a patient information software I was building a number of years back, where I had to dive into all those complexities of protecting patient information and HIPAA compliance, and I kind of dig it. So I was stoked about that on this side of it, because it really helps narrow the focus on how you're going to design the software.
Certainly does. And I've just realized I didn't actually, I brought up your URL and I mentioned syndication, but I didn't actually stop to ask you, what is decapdigitalassets.com and what is its purpose? So why don't we kind of step back just a bit and start there? That way our audience knows, obviously they're aware it has something to do with real estate and syndication now, but a little bit of the tokenization, but why don't you tell us what DCAP Digital Assets does?
Yeah, so DCAP Digital Assets is a syndication management platform, like an investment management platform. And this is going to be similar to a lot of other softwares that people have seen in the past or used currently, probably like Syndication Pro, Juniper, InvestNext, a cash flow portal. all of these softwares are pretty much the same. It's got a different UI, UX. It's all for managing for fun, like a fundraising portal, or for managing your investors and where those investors are in the deal cycle. And then once the deal closes, then managing the cap table and the distributions and all that. And that's what our software does. But sets us apart from the other players is that we are built on blockchain. We understand that blockchain there's a big learning curve with that right now. And so we don't require everyone to tokenize their assets. You don't have to tokenize your assets if you don't want to. If some of the people or investors want to tokenize their assets, they can. There's a lot of complexities right now. And so we run dual custodians. And so one syndication can run half of their investors through a traditional custodian, which is how it's all run right now, and then the other half could do blockchain if they want. And so it's we're just, as we transition into this new technology, and as the SEC gets more involved in the IRS and FINRA, we're going to it's going to create a much stronger pathway for us to see exactly where investors want to fit in. So we're just kind of keeping it broad right now and letting people transition into it as they feel comfortable.
Okay. And what is, if you'd explain to our audience, what is tokenization and how will that interact with the syndication?
Yeah, so tokenization is really just a digital representation of your ownership in that company. So I see a lot of people, they feel like, or I hear, people talk about tokenization as, it's almost like this concept that you're fractionalizing the actual property, and that's not how it works. Usually the property is actually in a completely separate LLC for asset protection reasons, but you're fractionalizing, again, just really how it is done right now. You're fractionalizing the ownership of the SPV or of the LLC that's holding the limited partners and general partners, if they happen to be in the same LLC. The private securities organizational structure is very complicated with the amount of LLCs that go into these deals. But basically, you're doing the same thing that you're doing right now. It's just that your ownership in it is on blockchain and is viewed digitally rather than having like a paper certificate for being a member of that LLC.
Okay. And now, does this adhere to the same strict standards as, say, 506B, 506C, where with the B, you've got X number of people who can be non-accredited and the others have to be accredited. And then, 506C, everybody has to be accredited, obviously, but you're allowed to advertise. How is this different from that, or is it strictly the same and it's just the ownership structure and records for it are handled differently?
It's all just records. It honestly, I don't really see it being handled differently. There's this concept or notion that one of the biggest battles that we have going forward is going to be education. And it's because a lot of people feel like blockchain and crypto are the same thing. And so there's all this negative sentiment around crypto, and that sort of bleeds into blockchain, when in reality, they're two completely separate things. Crypto is an application that uses blockchain technology, right? So this has nothing, tokenization has nothing to do with crypto. Blockchain itself is just a newer way of databasing entries. So you're already doing this right now. You're already databasing through centralized services. It's really just that exact same thing, just on a more transparent, more secure database. So it has nothing to do with there is no pathway right now for how tokenization works that is not already perfectly designed and placed in front of us by the SEC, as you're talking about regulatory compliance and stuff. And it actually, for us, so it's identical. Everything is absolutely identical. It's just how the information is stored. So we still have to go through those same complexities with the SEC and the exemptions that you're filing for. And and we find that blockchain actually helps assist that process, right? So blockchain allows us to create smart contracts that will not allow people to enter into deals unless they've already been qualified and gone through the accreditation process, or whatever that due diligence process is, depending on the exemption that they're coming in from, right? So if they're coming in from a Reg A and they're not an accredited investor, well, then part of that due diligence process is going to be pulling in their W-2 to figure out exactly how much money they have made, because that's going to be like 10% of that's going to be the cap for what they can invest annually, right? Versus a 506B, this is going to require people to have a prior relationship with someone in the organizational structure of that 506B to be able to even see the deal, right? And then a 506C can be open to everyone. So blockchain really helps us control permissions on what information people can see, what deals they can invest in, depending on their personal due diligence.
Sounds quite impressive, for sure.
That sounded complicated in my head as I was saying it.
Well, yeah, as you said, part of it, anything tech related, over the years has obviously been largely education based, and as we try to make things easier for people, sometimes they have to understand, what is what's easier about it, what's different about it, and how will they be interacting with it.
Yeah, so. And one of the things that we really really push and highlight is that, and I want to reiterate, is that it's the same feel, same look. Like when you operate our software, it's really no different than operating any other syndication software you've been on. You don't see blockchain, you don't feel blockchain, you don't have to learn about Web3. A core principle for us has been, if our users or anyone has to learn Web3 or has to see or feel blockchain outside of what they want to, then we've completely failed at our job. This isn't some crazy new tech. It is, but it's really just leveling up what we already have, right? It's just a better way of databasing, which people don't see databasing,
Yeah,
the only way you see and feel blockchain is like where you're starting to deal with the anonymous characters of the finance world, and that's not what we're about. You can't be a part of any deal anonymously. Correct. I guess you could through an LLC, but the LLC would have to know who you are.
Correct. Now, you say you're using blockchain. How is this being stored on blockchain? Are these NFTs, and do they associate to any other given token? Is crypto involved? Can crypto be used as a form of payment, or is this still traditional banking and it's just a matter of where the record's held?
Yeah, we've been very focused on allowing everyone to come in how they want to come in. If you want to use blockchain, you can. If you don't have to. And if you want to use crypto, you can. We partnered with Circle, so you can come in with BTC, Ethereum, or USDC, which is Circle. We don't anticipate a lot of that, especially with everything going on right now, and quite frankly, it's not really the best way to invest with a volatile asset. If you were to invest with, let's say, Bitcoin, it would be converted right away. But so it's like our custodians would never be holding on to the Bitcoin, and we would never advise that they do that. They really can come in the deal however they want. So we have Plaid integrated into the system, so they can integrate their banking straight in. You can use our banking with Circle, where you can accept ACH, and this is the crypto side. You can accept ACH. We pay out in ACH. Same with Wire, in and out. Ethereum, Bitcoin, USDC, in and out. We don't see a lot of that happening though on the crypto side. So there can be a crypto element if you want it to be. As far as how the assets are structured, again, that's going to be pretty unique to every single fund and how they want it structured and how complex it is. How many different asset classes do they have? Because each asset class would have to be a separate token. And if we're using NFTs or not, NFTs are used throughout the system in various different ways. They're used for access points. They're used for identity credentials. Like for instance, when you go through parallel markets, you're issued an NFT that you would never see, right? It's just used. It's attached to your identity and gives you access to different parts of the software where you're allowed in. But it's not. NFTs are not what people think they are. Like people think of
Correct.
NFTs as like Bored Apes or
Mhm.
artwork or whatever, and that's not how NFTs are really gonna be utilized by the business world at all. They're going to be used as access points, mainly in identity credentials.
Yeah, they have so much more functionality.
Way more,
Yeah.
like crazy.
Yeah, as a result of COVID, I've researched a lot of companies, and there are a lot of artists out there, music, artist wise, who use them, and they did get some actual artwork as a result of it, but they're also being used specifically for that, gateway access, concert access, specific limited live events, as they were first starting to get back out, and it gave the artist a way to be able to make some money in that process. But as a result of getting that, now those who took advantage of some of those deals and opportunities have access to concerts, specific specialized seating at some concert, some of their events that they're doing over the years.
Yeah.
Backstage access, access to occasional Discord events where they're interacting with them, in ways that most fans have never had access to. And it makes the people feel that much more in ownership and part of that band. I mean, they've made those people so much more loyal, as a result of that. So, I mean, do you see something like that being able to be used in a situation like this where, as a result of that, investors can make people more loyal to them or to their brand or to their investments as a result of that? And it, kind of simplifies the process.
It absolutely simplifies it. It makes it a lot easier to manage credentials in a very decentralized way as well. So I don't know how far down the rabbit hole you want to go, how deep in the weeds, but in syndications, the model that we built out with how we like to see assets structured is where the actual LLC is the NFT, right? So an NFT is just a smart contract, and so that lays out all the different rules. And so you can make a DAO an NFT, and then within that NFT you can fractionalize it. So this is using an NFT that it's the ERC 1155, which no one's probably going to know that, but basically what it allows you to do is it allows you to store NFTs and semi fungible. This is just kind of like a name we use, but semi fungible tokens. It allows you to structure those within an NFT. So you can have an LLC that is the NFT, and then you could have Class A share, Class B share, and then you could run your own internal currency if you wanted to, like a stable coin, all within a single NFT. It can get crazy complex. I don't think the world's ready for that yet, but nor will they even see it, right? So like on our software, you select your different investment classes that you're bringing in, and you don't know that when you're doing that you're actually creating an NFT for that, or you're creating a fungible token for that. You don't see that, nor do we really believe that you need to, because it's just technology. It's not like when I get an iPhone update I'm like diving deep in that thing, like what are all the updates, like what's going on. No, I just want to know, is it better than the last version? Yeah. Right. And that's how we see blockchain. We are focused on education for sure, but that's largely because of like just the miscommunication and that's out there right now about blockchain. I think when we get to adoption, which I think we're going to start seeing that kind of move through in 4 to 5 years. Like everything we're building right now is really for like 4 to 5 years from now. I don't think it's going to be this whole thing of learning about this new technology. I think it's just going to be leveling up, right? Like this is the new standard, right? That we moved from local servers to cloud, and now we're moving on to blockchain.
Yeah, definitely. So, I look forward to. I've not dove very deeply into the ERP 1155 standard, so I'll be diving into that and just looking at that versus 721 and some of the others. Just as I'd looked at some of those and how they can, allow the creator, even as the NFTs based off of that are sold and moved on down the line, the creator can still take a piece of that action as a result, all the way through continually create your own storefront, or the creator of it can have their own platform where they've got their own resale network and stuff like that.
Yeah.
So this is a completely different beast in and of itself, also.
Yeah, the ERC 1155 is really just the 721 on steroids, like intensely. Yeah,
that seems to be the comparison I keep seeing.
Yeah, but the to my knowledge, we are the only ones using 1155 when we're talking about security. Usually 1155 is used for gaming, but the most are going to be done through the ERC 1400, 3643, which is Trex, Tokeny. These are going to be secured. These are going to be smart contracts that are very specifically designed for securities. And we just took that framework and worked in the 1155.
And I'm assuming SEC obviously has to sign off on every bit of this before you're able to take it live.
No, the SEC doesn't really. They have no real, like, that would be like the SEC saying that we have to sign off on like AWS or on Microsoft. The way that the SEC views it is that it's the same thing. As long as you're following the exemptions, as long as you're following the guidelines that they set forth, how we store that information, obviously, like consumer protection, SOC 2, there are these standard things that need to be implemented to protect user identity, but there's zero guidance from the SEC on how or what smart contracts should be used for tokenizing assets.
Okay. Now, do you feel that y'all have, or let me ask you this, who do you see as your competitors in the investment tokenization realm?
So our main competitors are going to be ADDX and Securitize are going to be two of the big ones. Polymath is going to be another big one. Those are going to be our three competitors in the tokenization space. Where we differ from them is that they don't provide a real estate syndication specific experience. They're general equity or general private securities. So there is like a very specific flow or customer journey that you go through with real estate, and that's what we're focused on with this software. So when I would say like 3 years from now, it depends on how long it takes us to get it to like true commercial level. But once we get it to like out of alpha, out of beta, and really into commercial, then we'll take the software, we will repackage it, like restyle it so that it fits a different securities market. So it could be like wine, or could be trading cards. Artwork is a big one, where you see a lot of private investments go there. And we just take the same underlying technology and code base, we reskin it so that we're creating a very specific customer experience for art collectors, right? Just like we're doing with real estate. And that's the difference between us and like ADDX or Securitize, where they just have one platform where they don't really care if it's real estate or if it's art or if you're investing in a startup. it's the same UI. We think that we'll have far greater retention by creating a user experience that's dedicated to our user and what their asset class is in.
Definitely. In the process of researching decap, I came across and actually come across this company before. I'm not sure if you've heard of them or looked into them. Lofty.ai.
Yeah.
They're also tokenization, for real estate investments. But it looks like I think they're honestly operating more so on the. Sorry, my phone's vibrating here. On the crowdfunding, standard, because they've got much lower limits as to what people, for what people have to invest, per token. I think it's usually an average of around $50 a token. But they seem to still have the same overall goal. Is that something that y'all ever plan to go in that direction, or stay strictly 506B, 506C, and more traditional platforms?
No, we're definitely moving into Reg A. In fact, we potentially have a pretty good deal coming forward here with a Reg A client. So Reg A is where you can bring in non-accredited investors, and they're capped to how much money they make per year. It's 10% of whatever they make per year, right? Or is it 5? Yeah, it's 10%. And so it's like, all right, so if I make 100K, then the most I'm personally allowed to invest is going to be 10K. And so that's how most of these deals are set up. And I love it because it brings in it brings in a lot of people into real estate that were never really afforded that opportunity. Whereas you can get into it as a non-accredited investor through 506B. It's a lot more difficult. I look at our software when we're launching deals so Lofty is all focused around those types of deals, and they're kind of curating and controlling that. We're agnostic to that. It's our client, right? What does the syndicator that's using our platform want to do? Do they want to do, I don't care. Do they want to do Reg A? Sure. I don't, what do I care? My software can facilitate that for them, and they're a user, and that's all I care about, is that we're providing them the services that they want. On the Reg A side, where I really do like that is that it provides them a pathway for 506B deals, right? So when they use our software, we have a relationship with them now. And so if the syndicator wants to allow us to move some of those non-accredited investors into a 506B deal, right? Because the syndicators own the investor data when they're on our platform, right? So just because you're on our platform doesn't mean that we can contact your investors. So if the syndicator wants to work with us on a 506B deal, we can now bring in 35 non-accredited investors from these Reg A deals because we have a pre-existing relationship with them. We know how they invest. They use our platform. We communicate with them regularly. And so I do see it more as a pathway in. So I love Reg A. It's more complicated, and but for us, for the software side, the more complicated a deal is, the better it is for us, because we can code in all of those complexities, right? So the financial filings that you have to do with Reg A, same thing with Reg B, that you have to have financial file, you don't have to file with the SEC, but you have to show those financials to your non-accredited, well, really to anyone in the deal. So anywhere where there's more complexities, that's kind of where we shine.
Sounds nice. Sounds very nice. What do your services cost? What would a typical, and I'm assuming it's per type of fund.
No, it's really it's really the same across the board. So the software was designed to accommodate all different types of funds, and the more again complexities, the different types of funds that come in, the more of them that do that. it gives us just more experience with that type of asset or that type of structure. And so we definitely welcome it. We're looking at starting a starting fund around $500 per fund that you manage on platform per month, and then a discount on the annual. But so we just dropped our MVP a couple weeks ago, and our priority right now is to onboard the pilot group. And so this is where we're not charging. So we don't think we'll charge for the first 10 to 15 funds on platform. It'll just be kind of like, hey, thanks for using our platform and giving us all this data, right? Because right now it's very bare bones, and it's because it's the MVP. I don't like making assumptions. Okay, so like when we're building out the code, we're looking at securities laws, and we're looking at the regulatory framework, and there's no assumptions being made here. We know how to write the code for this. We don't want to make assumptions on this is how a syndicator wants to use the platform. This is how they want to do waterfall distributions. This is how they want to onboard investors. There are certain things that we have to have, like that they have to go through a certain process, but the look and feel, how they're engaging with the software, this we want straight from our users. So we're aiming at the first 100 million assets on platform, which could be one deal, it could be 20. That we are going to use that initial group as our test case to get information from them. How do you want this information presented, right? How do you want the deal flow to go? And then we'll start making UI changes and UX changes, and then we'll level up from there. But to answer your question, it's $500 per fund per month.
Okay, quite impressive. And are there setup fees to get started, or just, what is your plan down the road? Or will it always be just that set monthly?
No setup fees to get started. The more funds you run the cheaper it will be. Also, we are incentivizing funds to collaborate with us to launch new deals or to go into our global fund. So our software has a global fund that has two purposes. It's an evergreen fund that, so for anyone who doesn't know, an evergreen fund never closes. It has no end date, and it operates kind of like an index, but it has two main functions. It's to supply liquidity to the secondary market. This is going to be mostly like distressed capital. So, which we do see coming and being on the rise for the next 18 months, 2 years. Yeah. Where you have syndicators that need cash, right? And they're locked in these deals that they were thinking might have been selling right now, or like where they might, but they just lost 30% on the valuation of the property, or 20%, or whatever it is. And so I think we're going to start seeing deals kind of push out further than their expected timelines, just with everything that's going on right now. And for investors that need cash flow, we'll buy those assets from them. It's a very easy transaction for us to do because those assets are on our platform. So we know the cash flow, like we know how that's being operated. So that's a very easy asset for us to do our due diligence on. Like it's almost instantaneous. It's not, because we're not pulling in the project management, the property management stats and details or data. But once we have that information, it's very quickly to evaluate the asset, evaluate the purchase price, and to make an offer. And then that's one side of it. The other side is to provide liquidity and be a GP on deals with our fund managers that are on. So like when they start a new deal, they can come to us either on the debt side, or we'll come in on the equity. So that's up to them. It's all a negotiation. Yep. But the liquidity is meant to be for the users on platform.
Okay. Now, will you also have secondary liquidity pool or a marketplace for people who've got tokenized assets on your platform if they want to be able to sell to other people on your platform, or will there be a marketplace for that, or is that something you're looking to strictly keep to yourselves?
No, not at all. So to answer your question, yes, that's phase 3 for us, and that is our partnership with Temple Markets. So Temple Markets is our broker dealer partner. They are our ATS for the secondary. So we don't use their platform. We API with it. So so everything is still the look and feel. The secondary exchange and marketplace is still on our site. But if we silo, and this is what I think is a huge problem with what we see right now, like if we silo everything to just like our secondary marketplace to just our platform, that kills liquidity. So liquidity comes from people, comes from users. And for us to really solve the liquidity issue, like everybody talks about how like tokenization is going to solve the liquidity issue. It doesn't if we stay siloed in our own individual platforms. We have to integrate with other platforms. We have to get past the fact that like I own this investor and I want this investor to stay with me and I don't want to share this information at all, and I don't want to share them and I don't want to share their money. It's very selfish and it creates this stagnation. Like we're never going to solve the liquidity crisis, if we want to call it a crisis, unless we integrate with other people and with other platforms and say, hey, if my investor wants to buy your asset because it's a great asset, it's on your platform, cool, let me send you that information. Let me help facilitate that transaction. Yeah, and that's how we're going to solve liquidity. And that's how you're going to see private securities turn into operating like the public market, which is a dream. But, you know, it's really the only way it's going to go down.
Time takes time. I have a feeling we'll definitely get there at some point in time, though.
Yeah, we will, I think.
Just like the technology that seems commonplace now, it seemed impossible, 20 years ago. And the stuff that I was dealing, with as the sysadmin, back with my, what was it? I think early 05, 03, 04, actually, even, and some of the stuff that we were doing, setting up, multiple rack setups for customers with 40, 50, 60, hundreds plus servers to be able to handle live real-time auctions. Nowadays, the cloud just, makes that so much simpler and so much easier. And just the whole process is simple. And back then it's like, okay, we need X number of servers. We need X amount of bandwidth. We need, NetIron, routers to handle all this stuff. And it's just, now it's, go to a website, select, I want this many CPUs, this many cores, this amount of RAM, and just X amount of bandwidth available. And, a combination of Microsoft providing it, Amazon Web Service and a few others. And now you've got it there, and it's just, and grow at a moment's notice.
Exactly. I mean, like when you're having to buy all the hardware and store it locally, when you run out of resources, you're screwed. Like this could be,
and they're done that.
This could be a week's turnaround for you to like go and get more hardware or whatever it is. Whereas like now it's you build in triggers where like if my GPU gets to a certain level, we're going to go ahead and expand resources. Like it's this is where AWS, which is Amazon, like just totally crushed it in the cloud world.
Yeah. There are several companies doing that now that just, back in the day, if you got too busy, crap just slowed down, now it's nothing, it can be built in back end automatically. Okay. It'll just automatically start cloning, that instance, and, spin up more solid state drives and, more RAM and more CPUs. And, you're not going to slow down.
No.
So, what else would you like to tell us about your service? I apologize. You've done a phenomenal job of answering questions that I was thinking of before I even asked the questions. So
I don't know. I'm really a big fan of. I'm actually a really big fan of not preparing. I know that seems weird. I prepare for everything, right, except for conversations.
Yeah.
Because it just leads to such a more genuine conversation. So like I didn't personally prepare for like I don't know. It's like whatever you want to ask. I have an answer because I was the one that built this with the team. Yeah, I've been involved in every aspect of it. So it's no, I don't know. I think if I want to get a point across, and I think I've tried to make this point several times, is really educate yourself on what blockchain is, because blockchain is not crypto. And with all this negative sentiment that is out there about crypto and what's happening with FTX and Ponzi schemes or scams and all this kind of stuff, there are a couple different things. So Larry Fink, CEO of BlackRock, they're the largest real estate owner in the U.S. They run nearly an $11 trillion fund. They I'm paraphrasing, so I don't want to say he's quoted as saying this exactly, because I'm pulling quotes from a couple different people, but he believes that blockchain is the future, and BlackRock is very invested into blockchain. One of the biggest critics of crypto is Jamie Dimon, who's the CEO of JP Morgan, which is the largest bank in the United States. They've been building their own blockchain for 2 years. They have their own crypto, JPM coin, and yet he has been a huge critic of crypto and calls them pet rocks and stuff. Yet he's building it, right? He's building on blockchain, not crypto. Because I won't really consider JP Morgan coin because it's a coin, not a token. So a coin is going to be like Ethereum, Decap will be a coin, or Bitcoin. It's the native token that operates on the blockchain. So that's a coin. It's a commodity. I look at it as a commodity. Tokens, which is where all these crypto scams are coming from, from these tokens. These are digital assets that live on a blockchain, and that's when he's talking about crypto being pet rocks, he's talking about all these tokens. And I think he's right. I do think that well over 90% of tokens out there are, I would say 99.9% of tokens that are out there are either straight up scams or they're illegal securities. They're not filing with the SEC. They're not doing anything with regulations, and that's going to be this big, I think, transition with crypto on the crypto side. Is that they're going to force those people to either be banned in the U.S. or they're going to force them to file with the SEC. So yeah, my point is to educate yourself on blockchain technology, because it's not cryptocurrency, and the biggest companies in the world are transitioning onto it right now. This is not a fad. We are really leveling up the technology, and it's nothing to be scared of, and it's really nothing to be worried about. Be worried about your investments. Make sure you do your due diligence. It doesn't matter if they're into crypto. It doesn't matter if they use blockchain. It doesn't matter if they're doing land deals or mobile homes or single properties or multifamily properties. Do your due diligence. Know your operators. Know your GPs, and know that you're making smart, savvy, wise decisions on where you're putting your money.
There's something that just triggered a question. Thank you for saying what you just said. Are there limits, minimums that y'all are willing to work with? Obviously, I'm certain you can't have a maximum unless it's a limitation by the SEC itself. Like in crowdfunding, per company per year. But do you have minimums for someone to use your service at that $500 a month?
No, I mean, we've actually turned away people that would have been like our first clients, because I think they were being more supportive, in saying, hey, I have real estate property, like, can I use your software? It's like, I mean, sure you could, but it's just not, you're not managing investors, right? Like you're the only investor, so there's like no real reason to use it because
Yeah.
our software is for investor management. And so no, we don't have minimums that like we're totally agnostic to what the we have no agenda that we're trying to push on people in saying, hey, like you're not going to be qualified for our software unless your deal is like a minimum of 10 million, because what do I care what the value of the deal is? My pricing isn't dependent on that. Yeah. So if you find value in the software and you want to pay $500 a month and you're only managing 3 investors, then go for it. But I'll sit down and personally tell you how to do it cheaper. Like, because, take that, don't waste your money on software you don't need, like have need for it. Otherwise my retention is just going to go down and I don't want that. Like, I'd rather have higher retention and lose deals like before they come on board than try to talk people into using our software just so that they can stop paying in 3 months.
And potentially end up giving you negative reviews and
exactly.
I used that platform and I didn't like it. It just it was any laundry list of reasons why, and it comes down to they weren't meant to be on the platform in the first place.
Yeah, and they shouldn't have been. So, and for I would say at least the first 100 deals, these are all gonna be. We're not automating like we can. But we're not automating anything with the onboard process. We're doing this all personally. So where like I'm not having you sign up and say, hey, start importing Excel spreadsheets to import your cap table or your investors. We're that's more, I guess, is like a concierge service, but having these calls like where we're onboarding these assets together, we're working together while we're onboarding your investors. This is giving us very, very valuable insight into your organization and how you operate. And that's big data for us personally. So plus it ensures that no mistakes are being made while we're launching the MVP, and that we can by personally onboarding the first 100 assets, we're going to get a very good feel on how people want this process to go, and so then we can open up the door to automating that process. Really, what we want to see, and this is going to be difficult, it would be an API into like Syndication Pro or Juniper Square, where when they want to transition over, the data just feeds right into us.
That would certainly make life easier. Yeah. So, and you keep saying us and we, something I probably should have asked earlier. How many people are there on your team?
So, are we including like board members and stuff? My internal team is 8 people. But 3 of those are part-time, and so full time we have a staff of 5. And these are it's me, the real estate side, which is Jay, our creative director, which is Matt, our lead software engineer, which is Jonathan, and Ben, who is on marketing and growth. And that's really kind of all you need in a team. So that's for our tech side. On the real estate fund side, we are looking for partners on for operations, acquisitions, and equity, or capital.
Okay.
Yeah.
Sounds good.
Yeah. Because we have two funds that we're launching this year. The first fund is a $3 million raise for the prop tech, so that's for the actual software. And the second fund is a $10 million raise. It's actually a little bit less than that. That's the Evergreen Fund. So to provide liquidity to the marketplace.
Outstanding. And legal. Do you have attorneys that you prefer to work with, that you'll recommend to customers as they come to you, or just anybody, whoever they were already working with? And do you find you have to provide a greater deal of education if they don't come in with a fair amount of tech experience, or specifically from the tokenization aspect?
No, you don't see the tokenization aspect, right? So like again, this is just how we're databasing. On the lawyer side, that's a personal thing. If I were to recommend any lawyer, and I think you already probably know this answer because I think this is where we met, but Mauricio, he I don't know the name of his law practice. It's Premier Law. They're in Laguna, but Mauricio, he runs a community, the real estate syndication community on Facebook, and he is probably the greatest resource for legal I can think of in this area. We personally, the only law firm that we've worked with is Mofo, Morrison Forster, and they are. I mean, this is more on the tech side, and security is not for like real estate syndications. They are just a top-notch law firm. I mean, they're Apple's law. I mean, I'm sure Apple has like a ton, but they're one of Apple's main. I think Facebook, like, they're one of the largest in the world. But I wouldn't recommend them necessarily. They're like $1,000 an hour, which is it's just like you get three of these guys on one call for an hour. It's a $3,000 call. But we just like at that time when we were structuring and using them, we just really felt, because of everything with blockchain, if we don't have a global recognized like attorney, we just had felt that investment was worth it because of how well established they are in the world, because we're dealing with such a new technology. But for real estate syndications, I would go to Mauricio, no question.
Yeah. And there's a few others that I've worked with and a few friends have worked with. So I just didn't know if you had specific ones that were more preferably associated, beyond just your personal preference.
No, that's something that we will be building out though, which is like the vendor side, where you can go to preferred vendors of the platform. These are all going to be trusted vendors that work in real estate syndications, because again, the entire experience is around syndications, right? So speaking of your CRM, right? So this was actually kind of funny that when we started talking, you told me about Hive and the CRM, and I literally have had multiple meetings with CRM companies that specialize in syndications, because we're starting to look at building out these relationships so that we are providing resources that are not native to our platform. Because although we do operate a CRM, like we have CRM components, we're not dedicating all of our development resources to a very feature-rich CRM. Like our CRM is very basic. It's like, can you email out? Can you do newsletters? Can you like to your investment group or your syndication? Can you track where they are in the deal flow? That's it. We're not integrating into Facebook and into doing drip campaigns, and like you go to a proper CRM and they're very feature rich on that customer management relationship management.
Yeah, pretty much everything HiveMind CRM does. I'm sure Daniel would love to sit down and talk with you and see what we can do to help, or enable that level of integration for customers.
Yeah, we've been looking at. I would love to check it out. We've been looking at a couple different ways to do this. One of the ways is operating more like where it's just a frame. So like in our software, you could click on Launchpad, right? And then in Launchpad, there's a bunch of different apps. One could be Hive, and you click on it, and it actually launches Hive, like in its UI, like its native platform, right in our framework. It kind of works like an iframe, but not traditionally, because iframes can get very distorted depending on the aspect ratio of the viewers to how big the screen is. It's a cleaner. It actually operates more like a browser.
I like it.
Pretty much. So we're looking into that right after this. Actually, when we're done with this call, I have my dev meeting for 2023, where we're going through. I think we have 93 features that are highlighted on there to build out this next year.
I got to say, I'm looking forward to being, if not an alpha client or alpha tester for y'all, definitely a beta tester.
I'll send it over to you.
Done that with several software services, and I like to get in there and break stuff. So,
dude, we used to have when I had an office with our staff and stuff, we'd have like break the app challenges, like where we would take a Friday off and nobody would do client work. And although and we'd get like pizza and whatever else, and everybody would just do whatever they can to break the app or break the website, whatever it is. Those are my favorite. Yeah, those are the best.
I agree.
Yeah.
Most definitely. So one of the things we'd like to ask as we get near the end of each episode, Daniel started this and recommended it to me. What are you reading right now?
Oh, the every web page on the SEC's website, probably. I would say
more so book wise, but
yeah,
I know you definitely gotta know the SEC website.
Yeah, that's the number one thing I'm reading. But this I'll do a plug for Measure What Matters.
Measure What Matters.
Yeah. So this is all about OKRs. So OKR is kind of like a KPI, but it really focuses more on inspirational goals that help you get to the finish line, right? So what is your true objective, right? It shouldn't really be something minor. Like for us, our top OKR is market share, right? So it's getting to 9% market share, and that's for us, it's an attainable goal. We can get there. There aren't a lot of people in tokenization right now. There aren't a lot of people in even real estate syndication software, right? There's not a terrible amount of players comparative to other industries. And so it's an awe-inspiring goal. And then you step back from there and look at all the key results and what is it going to take for you to get there? What are these benchmarks that you have to go through? So it's a great book. It's mostly like use cases and like how is it applied at Google or Microsoft or wherever. But yeah, Measure What Matters is it's a good book. I think people
I've added it to my list.
Oh, nice. Yeah.
So do you have a preferred podcast you listen to, or what do you listen to? I'll say while you're driving or while you're working in the background. Is it music? Is it a podcast? Is it an audiobook?
So for sure, while I'm working, it's very difficult for me to listen to a podcast because they're going to say something. It's going to detract. Like it's going to be a distraction. I listen to instrumentals a lot. I actually have like this kind of weird thing where even if it's not instrumentals and it's just where there is singing or vocals to it, I have difficulty hearing words in songs. Like I have to like very consciously like listen for lyrics. But mostly I listen to instrumentals. I like flamenco guitar. That if I'm doing any sort of programming or diving deep into something, for sure, I'm listening to something more like that. Podcast is going to be on the car. I'm a big fan of talking while I drive and doing calls while I drive, like more personal calls. And I like podcasts while I drive.
Agreed. Yeah. Agreed. I'm same.
Yeah, but I don't have any podcasts in like specifically. I actually have a podcast that just popped up that I'm gonna check out, which is called, I think it's Capital Hackers. But I mean, I listen to a lot of crypto podcasts just to see where the news is at. We're going to be launching a podcast eventually. I mean, we put all this money into building this studio in my garage, so that we can eventually launch a podcast and deliver content to our base. We'll also use it for education.
Makes sense.
Yeah.
I think that's part of why Daniel and Anthony started this up, was just a way to be able to help people and talk to some of their customers. They find customers in the process, but it's also just educational as all get out. And it's a great way to make connections and network these days.
Yeah, absolutely. And it's great for search engines.
Definitely. Most definitely. Anything else you'd like to say before we wrap it up?
No, I just, I was stoked to connect with you and get invited onto the show. I'm very appreciative. Thank you very much.
Definitely. I appreciate you accepting the friend request. Like I said, you're among the few, and this isn't to stoke my own ego in any way, but 90% of my friends list on Facebook is people requesting me, and the majority of them sit unanswered for long periods of time. I have no clue who they are. So the fact that you took a chance and accepted me, and I felt bad that I didn't have anything to sell you immediatly.
I was appreciative kind of that you didn't. Because I was,
although I did end up hitting you up for a podcast, so
but I like that. That's great. I want that. We're looking for more of that, and not only okay. So I guess if I'm going to say a couple more things, we want to be on podcasts. We want to start spreading our message, right? We want to start talking about this. We want to start educating people on blockchain and how it's going to be used in the future. We also are looking for beta testers. We're looking for people to use the software, to have creative input, to actually be a part of the process and have some of that, that feeling of ownership. I gave this suggestion and they used it, that sort of thing. Because we're looking for that big time right now.
Yep.
Yeah.
I think myself, I'll definitely be interested in using it and testing it. Like I said, I believe Daniel and Anthony will also. I reached out to them as soon as we got this scheduled, and shared the link with them for your website, because it's something we'd actually been looking into earlier this past year, and it's a matter of jumping through all the hoops and getting things there, and this kind of boom, here it is.
Yeah,
so we're definitely looking forward to that.
Yeah, well, let's. We'll talk after this and
definitely
and set something up and get a demo going.
Well, I'd like to thank you for being here, Jared, today.
Thank you, Frank.
Definitely appreciate it.
Hey guys, if you would like to receive hot leads right to your cell phone in a text message, check out hiveleads.io, and you can receive the same leads we've been receiving in our campaign for 3.5 years. That's made us successful in the land game. Check us out.
The show is sponsored by The List Guys. Do you need more leads in your local or virtual market? 1 in 10 small businesses don't invest in any kind of marketing. The List Guys have over 35 plus list types to choose from, and you can mix and match any list or criteria. We also use the skip trace list and provide up to 7 numbers and email addresses. Every list you purchase will be scrubbed against previous purchases. The List Guys are here to save you time. Contact the List Guys today at www.1listguys.com. That's www.1listguys.com.
Daniel, thanks for having me back. When you asked, you talked to me about this before we got into the interview room. I could not. Every deal I feel like has a story in it.